Hey everyone, welcome back to another Stock Market Open live stream. Wow! Annualized GDP just came in lower than expected by a good chunk here. And at the same time, the price index came in higher than expected. That's not great because it's stagflationary. And we don't want to see this. This is a bizarre one. Okay, so I don't know how this is possible, but run with me on this. GDP was expected to come in at 2.5% because the prior read was 3.4%. Well, it came in at 1.6%, which is weird because GDP per the Atlanta Fed has just been running over 2.5%. Then personal consumption comes in at just 2.5% versus 3%. Get this, GDP price index comes in at 3.1 versus 3. Which is way higher than the 1.6 we had higher. And GDP core, quarter over quarter price index comes in at 3.7 versus 3.4. So this is very bad. Those are stagflationary numbers. You literally have lower GDP, higher price pressures. Then, to add insult to injury, we have, what is this? Wholesale inventories that miss substantially. You're down to negative 0.4% versus the 0.3%. And then retail inventories that miss. Those come in at 0.3 versus 0.5. Now, the good news is somehow you still have unemployment figures that are decent, but then again, those flip-flop last. So you're at 207 for claims and 1781 for continuing claims versus the 1814. So this is quite interesting. These are not good figures. And I don't think anybody should cheer these because stagflation is the worst thing that could happen. It is quite literally how we could end up in an environment with high interest rates and a recession. Again, the worst case scenario, because now you're in a recession, you're not even lowering interest rates. So the lack of a reduction here in the inflationary pressure is very bad. I know some folks, I'm just sort of looking at some responses here. Some people think that, oh, this is going to drive us back to 3 rate cuts because GDP missed, right? Wrong. Yields are actually going up on this because of the highest price readings that we've had in a while. In fact, the 30-year Treasury just climbed to 4.8%, the highest level since November 9th, and the 10-year Treasury is sitting at 4.68 at the moment, which is also about the highest level that we've seen since about October 30th. Yeah. So the depths of the market. So that's not great. Don't love to see that. A little disappointed in this. And it looks like so is BTC, which somewhat reiterates that BTC trades like a risk asset, not a safe haven asset. But let's listen to what CNBC has to say about this.
I'll leave it there.
Torsten, I'll turn to you first. Does this look like a soft landing to you? Does this look like an issue where economists got it wrong or maybe the government got it wrong?
Well, if you take it in combination with jobless claims that were better than expected and combined with the last 3 months, we've seen non-farm payrolls at 276,000. The labor market is still very strong, so the economy continues to do well. And this is not least because of the Fed beginning to talk about rate cuts rather than rate hikes, as they did, of course, before November of last year. That change in tone unleashed a rally in the stock market where now the S&P is up almost 10 trillion since November the 1st. And that increase in the stock market, for comparison, consumer spending in 2023 was 19 trillion. But that basically meant that we had a huge wealth gain, and that's what continues to fuel the economy.
But the Fed...
Yeah. Just be careful, though, because, again, that price increase or the quarter-over-quarter inflationary increase actually fuels rate increases, not rate cuts. If it's just a matter of a GDP coming in low, yeah, sure, then you can increase your propensity towards rate cuts. But this is more than that. All right, so this morning we did get American Airlines. Load factor comes in at 81.5% versus the estimate of 80.8. It's actually good news. Q2 adjusted EPS forecast comes in higher than expected, and it's looks like it's passenger revenue came in roughly as expected for Q1. And let's see here. Yeah, it actually looks like American Airlines is running on that news. So American Airlines is, up about 4%. That doesn't surprise me. This was a good report.
And look, I think the market has been primed for a pullback, and we got, a little bit more than 5% based on the recent decline. You had a number of people calling for a bounce earlier this week, and we actually put out in our weekly, we said, we think this is going to end up as a 5 to 10% pullback, but we don't think it's quite done yet. Just sentiment hasn't collapsed enough, and I think we have to watch those sentiment indicators, AAII, CFTC. Maybe this will get us there. We'll see where we are at the end of the week, but I think we've still had some froth that needs to come out.
The earnings numbers that have been coming in, for the most part, have been pretty good, but the expectations on Wall Street are also pretty high, and there's been big punishment for anybody who didn't hit exactly what was expected and beyond.
Yeah, I mean, even companies that were, and we ran the stats through last week, but even companies that were beating were getting punished pretty hard. So the bar is pretty high, and I think it is about guidance. I think there are a lot of questions about margins going forward. That's one of the biggest sources of skepticism I've seen in my meetings with the clients. I'm just doubting that we're going to get this massive margin expansion this year.
Well, yeah, not only that, but you have to consider, like, even a Meta that's like, oh yeah, we're going to spend more money on AI. Don't worry, one day we'll make money on AI. And, Zuck in his earnings call yesterday, he was very convinced that, oh, hey, yeah, no, we need to, we just need more time before we can make money with AI. Oh, okay. So it's just more time that's going to change it. They suggest that their algorithms are better because of AI, or that their ability to provide services to advertisers is better because of AI. But how do you translate that to revenue? Would you charge every time? There's plenty of free services in AI. So that's a rough bet to make. Anyway, as a result, after those Meta earnings, you do have Trade Desk down about 3.7%. Wow. Amazon's down about 3% in the pre-market. IBM's down 9%, ServiceNow down 4%. Some of these obviously reported. GDP. You've got Chipotle up about 3%. Tesla's up about 40 bips. Bitcoin moving down on those GDP figures. And all of a sudden, as soon as we start talking GDP and inflation, Nick T spawns in. Nick T just spawned in. He just said real GDP increased at an annual rate of 1.6% in the first quarter of 2024, a broad measure of U.S. economic demand. Real final sales to private domestic spending, which excludes trades, inventories, and government spending, increased at 3.1%. That is, again, real final sales to private domestic purchasers, removing trade, inventories, and government spending. Actually increased to 3.1%, which is good. I mean, that's a nice move by the non-government sector, but still, that overall GDP level with the price pressure level is the issue.
Hot inflation numbers, cooling growth, and jobless claims remain low. That to me, a healthy labor market's probably just lasting because of how much money the government has spent, how much money the government continues to spend. But in the grand scheme of things, keep it simple. These numbers aren't really good. And if you're looking to Fed fund futures to tell you the future, you're looking at the wrong contract. I think Torsten has a better potential track record on calling what the Fed's going to do than looking at distant futures contracts for Fed funds, which are just fancy T-bill contracts. They give you a good indication of the next meeting. To draw any more significant conclusions beyond that, you're really beyond the limits of what the contract can or cannot do. Ultimately, what the Fed needs to pay closest attention to is the idea that there's so much potential problems down the road with so many large industries, so many question marks on things like energy, natural gas, how all of those things in some of the special things that you need to put the batteries together, some of those minerals, All of these issues are coming home to roost at a time where the U.S. economy is being held back in areas that it's good at, like energy, and it's being force-fed in other areas, like transitions into new standards of driving and vehicles that the public isn't ready for. These numbers are telling us that the future is probably less growth and higher prices and higher deficits for a long time.
Let's go back.
Yeah, again, that's pure stagflation. I mean, it's almost like Jamie Dimon over at JP Morgan had some incredible insight into the data that we were going to get here, given that just 2 days ago he starts yapping about how we're going to face stagflation. Again, this data is not good, but in the face of this not good data, you have Bitcoin that's down at 63.7. Again, it trades like a risk asset. You know, I'm not bagging on Bitcoin as diversification away from greedy government spending or a fiscal hedge. That's not this discussion at all. It's just the bottom line is when risk goes up, Bitcoin goes down. It's very simple. It's actually a pretty easy trade, and the people who like to trade crypto they accept that. They realize that. So then we've got the Qs rotating now down to about 1.4%. Tesla is maintaining about a 22 basis point lead. You're really sitting on about that 162 level, having a lot of trouble breaking down below that 162. Now, yesterday in trading, one of the things I noticed is you had a lot of support around that 162 level. You really wanted to keep rubber banding onto 162. So 162, a good sort of starting point. The question is, are markets going to price in today stagflationary concern, which would mean higher rates, which would be a negative to Tesla? And could that leave you breaking the 162? Absolutely. If we got to a situation where J. Powell was keeping rates long all year or potentially had to raise rates, of course that is going to affect the autos. Then you've got Supermicrocomputer 3%, Palantir 2.3, 2.4. You've got Coinbase moving down a smidge here on this. Should probably be moving it down a little bit more than this. Yesterday morning, by the way, we opened by suggesting, hey, those Coinbase 223 puts are probably where it's at. We opened with Coinbase at about like 338, and we closed with Coinbase essentially at 223. It was about $1 more. It was about 224. So you put it all the way down to 224, down 5%. And then in after hours, you broke that 323, and now you're sort of bobbing on that level. So it's a pretty big level for Coinbase there. All right. Kind of makes for an easy trade sometimes. Okay. So same thing with Nvidia, by the way. Watch Nvidia. Nvidia's line yesterday was heavily the 796 level. Look into the close. You're bobbing on 796. And then you did go down to about that 777 line. And those are more day trader lines. So watch those. Not as strong as the others, but it's definitely something to pay attention to. Tesla is a little volatile right here in the pre-market. So we'll have to see how it moves once the market actually opens. And Nvidia is down about 60 bips with Facebook after that higher AI spending without AI revenue recognition moving down 15.4%. Okay, shout out to, by the way, everybody in Seattle and Spokane yesterday. That was very entertaining. Appreciate y'all being there. If you haven't jumped on the Roadshow RSVP yet, today for House Hack, we will be in Vegas and Scottsdale. So buckle up. Let me take a peek here. Let me just verify. Yeah, we have Vegas. Wow, it's already Thursday. Yep, today. And that's at 5:30. Scottsdale at 8:30. So go to househack.com/2024 to get some more information and RSVP. Tomorrow will be Oklahoma City, Nashville, Miami. Sorry, Miami will be Saturday morning, along with Tampa and Orlando. And then after the Saturday, we'll be going to Boston, Teterboro, So New York City, Richmond, Toronto, Chicago. It's going to be fun. And those are all coming up. Denver, Dallas, Austin, Houston, San Antonio. Or sorry, not San Antonio. San Diego and Long Beach. Okay, so Tesla goes red pre-market. Probably most futures red as yields are going to go higher. This is a bad GDP report. Oh my gosh, yeah. The 10-year Treasury is now up to 4.71. 4.71 on the 10-year Treasury. All futures are red. Oil popped about 43 bips here, and gold is up about 6 basis points. Okay. Rip. That's bad. Trying to think. Trying to think how this could be seen as good. I mean, again, you could try to parse into some of these GDP numbers and try to get some hope, but U.S. first quarter GDP, disaster. Let me look a little bit here. So if we were to set aside the slower increase in inventories and the wonky impact from trade, GDP growth clocks in at 2.8%. Okay, so that's better, but it's still, you know, let me see here. What was the last read? So the last read was 3.4%. Survey was 2.5. They're suggesting here that, oh, you know, just forget about the fact that we're not adding inventories anymore and remove weirdness in trade, and we're at 2.8. The problem with that is there's usually a reason companies aren't adding inventory. They're not adding inventory because of weaker consumer spending. So, yeah, as they say here, consumer spending did slow last quarter. So there's an overall deceleration underway. No, that's not good. Okay. Net exports deducted 0.9 from the headline. Strong dollar seems to have put some pressure on exports. Yeah, well, that's not a surprise. Okay, let me throw this up. And at the same time, I want to listen to hear from her.
Country, across sectors, across income.
Oh, this lady.
Because at the end of the day, what non-competes do is they keep talent locked up. They prevent a more efficient matching between employer and employee. And so getting rid of non-competes will be good for workers. It'll be good for the labor market, but it's also going to be good for our...
This is a proposal, by the way, that's expected to go into effect in August, where employers are just no longer able to honor or commit to, rather, non-compete agreements, giving employees more freedom to potentially take their skill set and go somewhere else.
Restaurant with a non-compete, that makes no sense. A hairdresser, all sorts of people in that kind of space. I think it gets more complicated the more senior you get in an organization. And if in fact the rule is not just to keep the current contracts of those senior people in place, but new contracts would not allow for non-competes, how you're supposed to think about how a business is supposed to make an investment around one particular individual if in fact they can turn around tomorrow and go to the competitor across the street.
So we absolutely heard some concerns from businesses, especially as it relates to trade secrets or a concern that somebody will be able to leave and take the customer list. And those are legitimate concerns, and that's why we have things like trade secrets law, non-disclosure agreements, non-solicitation provisions. So all of those would be able to stay in place. When it comes to, you know, investing in workers and investing in people, that's something that will happen anyway. And if the goal of the business is to keep those people, then they can do that by creating all sorts of incentives, right? You can pay them more, you can provide better benefits, you can enhance the working conditions. And so we believe that there are other levers that businesses can use to actually attract and retain
I'll use
people.
an example just because we're on TV. So most people who are on TV have contracts that prevent them. So here we are at CNBC, NBC Universal is the parent company. ABC is just down the street. Literally, Good Morning America is right there. CBS is just across the street as well. I could not call up my boss today and say, you know what, thank you so much, this has been wonderful. I'm going to work over there tomorrow morning. Do you think I should be able to?
If you have a current contract, that reflects the fact that this non-compete is in the contract. Your compensation package probably also reflects that. We don't want to disturb that because we realize that for people who are, doing very well for themselves.
Basically saying current contracts, oh, don't worry, you're fine, everything's fine. But yeah, future contracts, you'll be able to do that, yeah.
Going forward, we believe that those should not be in place, and companies will be able to use other mechanisms to retain people if they want.
Let me ask you about what might be described as workarounds, which is to say you look at the state of California where this is already in operation to some degree, and people can develop LLCs, partnerships, and the like. Partnerships in the state of California, if you become a partner, there's a view that non-disclosure, or not non-disclosure, but non-competes are different. Do you think that there are other places that, and by the way, the financial industry, private equity, banks and the like are typically not regulated by the FTC. Are they regulated by this rule or not?
That's right. So the rule is limited by the FTC's authority and the contours of that authority. So in sectors where we don't have authority, be it banks, be it certain types of common carriers, employees in those sectors will not be covered, but other government agencies do have the ability to reach that. I'm so glad you mentioned California, because sometimes one argument that gets made is that non-competes are essential for innovation. But as you know,
California doesn't have non-competes.
Enforceable in California since the 1800s, and I think people would be hard-pressed to say that California hasn't been able to innovate. And so we think that eliminating non-competes will actually boost innovation, boost new business creation, and be better for the American economy.
What do you say to the argument about just cost? The cost to a business to enforce non-disclosure agreements, for example, to enforce controlling your own IP could go up. I imagine you will see a lot more lawsuits in the future against employees, against rival competitors, because employees will go from one place to another, which they did in the past, and they will have to go to court to try to enforce something that you could argue they were trying to enforce through the non-compete.
If a business believes that an employee is violating the trade secrets law, they absolutely can bring a lawsuit there. The way that our system of law and system of justice works is that you can only bring a lawsuit and only penalize somebody once they violate the law. The idea that instead we should have non-competes that preemptively lock people in place just because they might hypothetically in the future one day, violate trade secrets, it doesn't really make sense. Non-competes is way, way, way overbroad for that purpose.
I wonder if this...
All right, we kind of get their direction here. The FTC chair, big fan here of getting rid of non-competes. Moving on, we have these GDP stagflationary numbers that are not great. Now, sometimes we can get weak GDP numbers. The San Francisco Fed did some research on this, and San Francisco Fed said we show that although the Bureau of Economic BEA, Bureau of Economic Analysis, yes, tip of my tongue, adjust for seasonal movements at a disaggregated level, the published real GDP figure has residual seasonality left in it. After we apply a second round of seasonal adjustments directly to the published aggregate data, we estimate much faster real GDP growth in the first quarter. Conclude that there is a good chance that underlying economic growth so far this year is substantially stronger than expected. Okay, that's interesting. That's a 2016 piece. So in 2016, they're talking about, oh, don't worry, the first quarter is just weird. So don't mind the first quarter GDP numbers at all. Yes. Well, let's try. Let's look up quarterly GDP reports. Let's see how they were doing in 2016, shall we? So, 2016. Okay. I'm going to edit this to percent change from a year ago. Let's see. 2016. How interesting. Look at that. Q1 fell. Q4 was down. Q1 was down, Q2 was down, Q3 was basically at levels of Q1. So no, I don't think you could just blame the first quarter. I think that's a little kooky, that Fed piece. I mean, that Fed piece was written in the first quarter of 2016 where they're like, don't worry, everything is fine. Yeah, right. Fed swaps no longer fully price in a rate cut before December. Yeah. This drives yields up, and then that tanks TMF. I know a lot of people were looking at TMF thinking, oh, well, if rates have topped, then, you know, it's just time to buy something like a TMF, triple leverage bond. I mean, Fed rates may have topped, but that doesn't mean market rates have topped. We did touch on that yesterday about the potential for a 10-year to go up to 5% and the 2-year to stay stable. Let me see where the 2-year is sitting right now because this isn't good. The spread's still about 29-ish bips. Yeah, Bitcoin's down to about 63.3 on these numbers. So Bitcoin not happy. In the chat here, we've got someone saying, Kevin, thank you for warning us back in April. It is still April. But I know what you mean earlier in the month. These puts have done nothing but print. Ja, das ist nicht gut. That is not good. So let me get a little more insight into this. Somebody's asking about EHAC. That's my fault. Try now. Okay. Investment spending was solid despite historically high interest rates. Fine. Residential construction up 52 bips. You've got inventories led to a negative 0.32 contribution. Ooh, savings rate down. Okay, so 3.6% savings rate versus 4% prior quarter. Great, yes. Less spending, fantastic. Or sorry, less saving, great. Trade subtracted 0.86. So let's write that down. Minus 0.86% due to trade. That could be driven by the strong dollar. You know, we were sort of joking about like a mind trick. But I want you to think about this for a moment. The joke is, if we want to get out of debt and we don't want inflation in America, let's just print other countries' currency rather than our own. So let's print euros or yen or renminbi or whatever, or let's just print all of it. Then we'll use that to go buy our own dollars, and that'll strengthen the dollar, and at the same time, it'll give us currency to pay off our debt. And guess who gets stuck with the inflation? They do. Think about that for a moment. Now, that would be called illegal and counterfeiting and fraud. Just saying. If we're going to print all this money, why are we printing our own? Let's print somebody else's to buy our own money back. No, it's all a bad idea, but it's an interesting sort of thought experiment if you like that sort of thing. Because it really makes you start wondering, okay, if we did this and this would happen, it's quite fascinating. Yep. Traders push back timing of first rate cut. Yeah. I'm going to write that down. So that was no longer pricing in full rate cut before December. So in other words, delaying rate cuts. This report gives the Fed breathing room about cutting rates later. That's what a suit here says. The fact that inflation has proven sticky in terms of core PCE is what the Fed will focus on. Yes. Well, that number we're going to get tomorrow. Oh, dear Lord. All right, let's listen in here. Oh, what is this?
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures do tumble here, not just on Meta, IBM last night, but that disappointing macro as Q1 GDP comes in 1.6, lightest since 2022, with a warmer than expected core PCE. 10-year 4.7 is now the high of the year. Our roadmap begins with that growth surprise, GDP increasing less than expected in Q1. Stocks do look to open sharply lower.
Plus, Meta shares are set up for what could be the worst day the stock has seen in years. The company surprised investors with plans to spend even more aggressively on AI. Also, that second quarter guidance, perhaps not that exciting. And on top of that, we got a massive earnings day, of course, Comcast. 5 Dow components also reported. We got Merck, Honeywell, Caterpillar, Dow, and IBM. One of the biggest laggards on the S&P, by the way, ahead of the open.
Let's begin with the market reaction to the weaker than expected GDP. Jim, 1.6, looking for 2.5. No, prior to estimate was about 2.5.
This is by far one of the coolest tweets right here. Look at this. Tesla misses. Plus 10%. Meta beats. Minus 10%. Intelligent investor book to the trash. Yeah, well, in fairness, an intelligent investor doesn't talk about playing earnings. It talks about finding mispriced companies and waiting for the stock market to properly price them and then selling them. So, oh well.
I was leading to that.
All right, well, I beat you to it.
Yeah, you did. But look, stagflation to people who aren't familiar with things means that there's nothing you can do. The Fed can't get inflation under control.
Right.
So therefore, it can't cut rates, which therefore makes it so you get today.
So you get a weakening economy. Or is this just some sort of weird one-off? Or is it reflective of kind of these things you've been talking about? I've been talking about a little bit as well.
March is a crummy month.
When you hear, you know, restaurant receipts and various things like that, diesel prices, I don't know.
No, look, we got a frugal consumer. Thank you, Goldman, for upgrading TJX. We have industrials just doing okay. We got Caterpillar, and we don't have that revenue raise I'm looking for. We have tech, where you have ServiceNow. They're going to be coming on soon. And this stock is down very badly, and one of the reasons is because people say, well, wait a second, they didn't raise as much as they usually raise. Now, that's the kind of false positive. In other words, they're still raising. But what it amounts to, David, is just you're struggling on a day like today to say, okay, what do I do? I got this 10-year at 4.7. I was told that if it didn't hold 4.6, then I should sell.
Trouble. And not to mention we haven't seen 5% in a little while on that 2-year. Just hello.
I bought that 2-year, earlier this week. I'm already taking a beating. Imagine taking a beating on a 2-year. Carl, I'm not giving up on it, but because today is a tough day. But look, we left here last night, and we could say we left here on Ford, and Ford's great. And Jonas is talking about how we have a part of Ford that is worth the price of Ford.
You want to go through the names that raised guidance?
Yes,
Merck, Ford, Royal Caribbean,
Yes.
Chipotle, Waste Management, Align, LRCX,
Yes.
SP Global.
Yes. Wow. Yes. But then, okay,
All
so
that and a 5+% 2-year will get you a down market.
no, Carl's right. I mean, we're sitting here and we can bemoan everything.
Look, a lot of the 1.6 number is net exports and inventories. You still got consumption running 2.5, and we'll see.
Remember, savings down as well. So, yeah, I mean, sure, we can take out trade and inventory build up and go, oh, everything's still fine. Of course, we'll always be able to say things like, oh, don't worry, everything is still fine. Royal Caribbean did indeed increase guidance, by the way, coming in with a 2.7 for Q2, expecting $2.37. So they did well. Now, with that said, the stock market is rewarding them with a handsome 2%. It's crazy, especially since that's a very good report. That's very low price action.
Industrial activity.
Exactly. So we have ways to look at the economy other than the 4.6, 4.7 conundrum. But we also know that when you get a company like Meta lowering the boom, and you get a company like ServiceNow not raising enough, and people start saying, okay, I've got the bonds going the wrong way, I've got the GDP going the wrong way, maybe I have to trim. Now, I don't think that's wrong. That's what I said yesterday. I had this really I was apologizing to club members, saying, "Look, I hate being this negative, but I don't have the horses. When you don't have the horses, you can't foment the horses."
To Jim's point about Meta and Zuckerberg last night, raising the CapEx guidance, rekindling fears of a new investment boom. Take a listen.
Significantly more over the coming years to build even more advanced models and the largest scale AI services in the world. As we're scaling CapEx and energy expenses for AI, we'll continue focusing on operating the rest of our company efficiently, but realistically, even with shifting many of our existing resources to focus on AI, we'll still grow our investment envelope meaningfully before we make much revenue from some of these new products.
Are you worried about the opposite of the year in discipline?
See that, honestly, like, that is the biggest fear with AI, is that people are going to blow money on all this AI infrastructure, and then guess what? Companies are going to go, cool, how do we make money from this now? So we're slightly more efficient, so we slightly have customers that are a little happier with some AI features. What good does that do if you can't make any freaking money? Well, it's good for the consumer. Every consumer wins. But man, I don't think that means the AI companies win. I still maintain, I think the best AI, like the real AI play is Tesla. But the revenue recognition for that real AI play is not really now. I mean, we did beat on margins with some revenue recognition for FSD, but most of the revenue recognition for Tesla is frankly in the future with artificial intelligence. But some of these companies, I think, that are like, oh yeah, we're going to be an AI play. It's like, okay, good luck. Hertz comes in with revenues of 2.08 billion versus 2.03 expected. You've got, upsized EV disposition plan, dumping 10,000 EVs in Q1 and expecting to sell 30,000 electric vehicles in 2024. So, yeah, they don't like EVs. Remember, Hertz started complaining. I mean, they just took a $392 million loss unwinding its Tesla fleet. One of the reasons you see rental car companies sort of bailing on Tesla is just the repair aspect. They're not easy enough to repair yet. The availability isn't great.
Deserves that.
Yes.
But it also does raise some concerns, even though they have 30,000 fewer employees than they did in November of 22.
Well, obviously that's, but you have a situation where hardware costs more. Now, what are the takeaways? Evercore, really good piece today. Winners, Nvidia. Nvidia stock is going to be down today because it's part of a cohort called tech.
Yeah, meanwhile, all they just did is tell you how much money they're spending on these chips.
I know, it's costing a fortune. I got a great one for you.
Yeah.
Who's the second on the Evercore list?
I don't know. Who?
Broadcom. Who joined the board in February?
Right.
Hawk to end.
Yeah,
I like that.
That's an interesting.
Don't you think?
Connection.
Now, he said something interesting on the clip. Energy costs. Now, speaking to GE Vernova, which is Scott Strazik, the amount of cost of energy, for the first time in years, is really going much, much higher. They're going to have to compromise. Every one of these companies is going to have to compromise to start using natural gas. They can't just rely on wind and solar.
But also, Jim, it's one thing when an Alphabet or a Microsoft or an Amazon, even their CapEx, particularly when it comes to the spending they're doing as hyperscalers in the data center.
Right.
Because that's just money they're putting in that they immediately charge customers who are using it for. This is different. This is new products that conceivably are going to be based, by the way, on...
Yeah, somebody here in the chat says the AI bubble is bursting in slow motion. Yeah. Yeah, unfortunately, there's a real possibility of that. While I think that the infrastructure spending will continue likely for the duration of this year, once the AI infrastructure is established, I'm not convinced it's going to rotate as quickly as markets believe. Like, AI, don't get me wrong, it was a leap forward for consumer accessibility to information or otherwise. Was it anything more than that? I know there's talk about, You like GPT-4. Wait for GPT-5. It's going to be mind-blowing. Cool. When? Because we've been speculating on it for a year. Maybe in 5? Yeah, so when's the next leap forward? It will come. Don't get me wrong. I'm definitely not, I would never long-term bet against AI. Short-term? Absolutely I would.
Where he's talking about how we report our financials as a family of apps, and then they also report Reality Labs, where they had an operating loss of, I think it was $3.8 billion in the quarter. As I said, maybe they spent as much as $40 billion on this thing. Remember, they changed the name of the company to Meta. Whoa. That said, Jim, he goes on to say, I think fundamentally they're the same thing with the vision of Reality Labs to build the next generation of computing platforms in large part so that we can build the best apps and experiences. So over time, we're going to need to find better ways to articulate the value that's generated here across both segments, meaning maybe they stop breaking Reality Labs numbers out.
Yeah, I think they have to.
AI bleeds into...
No, don't do that. You give a lack of clarity on Reality Labs numbers and markets will freak. We're even more pissed. That's like Tesla not breaking out numbers. You got to be very careful. I hate it when Tesla does that because they just hide data. Like they didn't break out solar data. I usually like using that as a leading indicator for other solar stocks. Nope. Yep, Microsoft earnings today. That is true. Car for coin. Thanks. Coinbase is the best for the next 12 months. So you need to see applied AI, not just AI. What do you mean? Like actual functional uses? I might actually be able to afford your course if we keep dipping like this. Can we get a STAG coupon code? Let's just say we have a coupon code expiring April 30th. And remember, we do have the expiration of the House Hack fundraise. And that is May 1st. We've got some, I think, really cool opportunities with House Hack. And just the way we're going to grow it, we think there's a chance we can accelerate it faster than we've ever thought before. So a lot of it's going to come down to how we pull off mini funds. And so we couldn't be more excited. So stay tuned for that, and I'll keep you updated. But it's kind of cool. You sort of get a full insight into a YouTuber creating a real estate startup. It's wild. So it'll be really fun. You'll get to watch. And if you're an investor, well, let's just say I'll, you can be sort of careful with what you say because you don't, remember investments have risk. SEC, you're watching. Read the PPM. This isn't a solicitation, otherwise. But, my goal is to just do the best I possibly can for the shareholders in House Hack because, if we can knock it out of the park, the number of doors that open versus doors that close if you don't do well is immense. So very, very important. Do a fantastic job. Okay, Nvidia dropping below 780. Q's down, 1.8. Facebook, pretty stable there at about -15. Trade Desk, 4.8%. Oh, man, Amazon down 3.5 on this. Tesla goes negative. 1.6%. Should have kept the puts. Well, then that would have been a bet on GDP, though. That's a different bet. ARM down 5%. Enphase 3% to the downside, down to 103. Supermicro's down 4.2. That pain could accelerate today. Down to 216, down another 6 points on Coinbase. Affirm down 530. Holy smokes. The pain is coming back. We had 2 good days, and now it's back to pain. Again, I think a recessionary induced sell-off is bad. Nobody should wish for it. It's bad for the economy, and it's bad for people's jobs. Everybody thinks they're going to buy the dip. When the economy goes into recession, you ain't buying any kind of dip if you don't have a job, and you're struggling to pay your bills because you don't have a job, and then you can't get a job. That is hell. So, yikes. You've got Apple here on screen declining even further on these. Whoa! Google down 4%. Stagflationary numbers and a 1.3% miss from Meta. What a day for the frickin' Bears. 2% now on Tesla. Damn. should have kept the puts. Couldn't have predicted that miss on GDP. Oh, here we go. It's Glasses Bro. Let's listen to Glasses Bro tell us, don't worry, AI revenue will come soon enough. Just don't look at our guidance.
Fine, Jim. You know, we had a triple play. We beat on the top line, we beat on the bottom line, and we raised our full year guidance.
But don't talk about Q2, okay? That sucked.
Increased the guide enough, but that seems to be a pretty high-class problem because, you know, ServiceNow has become the AI platform for business transformation. And we're proving that. You know, the #1 Gen AI use case in the world today is process optimization. So, Jim, in terms of things being fine, think about every business workflow and every enterprise around the world is going to be engineered with Gen AI at its core. And we are that single pane of glass that's going to drive that transformation.
Okay, let's talk about that, because after listening to Mark Zuckerberg last night, he says that Gen AI costs a fortune and there's absolutely no return within a couple of years. Why is there a return instantly for Gen AI for ServiceNow?
Yes.
And a really smart guy like Mark Zuckerberg.
Actually, honestly, well put, Jim. I can't believe I said that, but yeah, that was a good point.
A lot of money on it already because we have small language models that are domain specific, which means they don't take a lot of compute power. They're lightning fast because we're working with the customer's own data. And they're highly secure, again, because it's the customer's own data. And we also remain open.
That's how Apple's going to win, by the way. On-device LLMs.
They fully integrate with ServiceNow should the customer wish to go that way. And, you know, that's the best of both worlds for the customer. Totally open, but at the same time, today we're taking great companies like Microsoft and IBM. They're transforming their employee experience with digital-first support models, freeing up resources and fueling.
What does that even mean? Employee support models with digital-first support models? Yes, I'm going to work at Google, and let me just pull up my Google AI chatbot. Please help.
And financial management with Gen AI from ServiceNow. And we're billing for that right now. So the game is on at ServiceNow.
Well, right, again, and I totally agree with that. You know, I'm looking at the stock.
This is the top.
I'm looking at people feeling a little jaded about Gen AI, and I'm wondering if I worked at Novartis, how am I impacted by ServiceNow? What makes my life better? How am I more productive? How am I bringing more to the bottom line? I need to know this.
Somebody says Christopher Walken vibes from this guy. Let's go. More cowbell, baby.
Gen AI. And I put the so-called in after listening to Mark Zuckerberg, who is a darn smart guy.
He sure is, and we admire him greatly, and he's got a great company. We just have a different approach to this, and you know, the proof is in the pudding. I mean, our free cash flow was up 47% year over year. Total gross profit up 83% year over year. So we've proven that we can not only grow the top line, but also the bottom line. So here's what's happening, Jim. Let's take employees and customers. Think about Gen AI deflection rates. They've doubled in all of our installs, and they're improving every month. So the soul-crushing work that people don't want to do, they don't have to do anymore with ServiceNow. Think about software engineers, 48% increase in the speed to innovation with natural language text turning to code. Think about...
Yeah, we already know. Yes, GPT is good. Copilot's good. We got it.
And improving the security posture for companies. And I can go on and on. These are use cases.
No, you can't.
We're doing right now. So the CEOs that are out there, they want a flag in the ground on Gen AI. Microsoft has done a great job with their solution, and they're giving a Copilot, and we're teaming up with Microsoft with our Now Assist AI Copilot. So just think about a CEO listening to the show right now. You want to team up with Microsoft, you want to team up with ServiceNow, total engineering integration, total teamwork. Let's go.
All right, so you said software engineers doing better. When I listen to Jensen Huang, he's saying we don't need software engineers like we used to. Are you able to eliminate software engineers because you're talking natural language? Why can't I just talk to the machine? Why do I need these code writers?
It's a great question. And we still need our engineers, Jim, because we're going to be the defining enterprise software company of the 21st century. So we've already improved their productivity by nearly 50%. So you could say, do I need half the engineers? No. At ServiceNow, we say we need all the engineers, and we're going to keep hiring them because we intend to define the enterprise software market in this century and give customers an entirely new experience. And
okay, I just looked up Now Assist. right here, it's a freaking chatbot, bro. Look at this. First of all, generic photos, developer, admin, customer, agent, employee. Generic photos, and then on the right side, they show you the Now Assist chatbot. Hi, I accidentally ordered my caramel macchiato from the wrong store. What should I do? Let me look up the order for you. Whatever, AI does it. No problem at all. We can definitely help you out. We can either refund your order or transfer it to the correct store for you. What would you like us to do? Transfer order. Select which shop. And it's great. I get it. It's a chatbot. It's fantastic. But is that worth the AI multiple that that is being applied to some of these companies? I don't know. But what I will say is more cowbell is amazing. And if you haven't seen more cowbell yet, you can now meet Christopher Walken. This is much more important than this AI stuff. Is getting demonetized on YouTube by SNL.
Come on, Gene! You know, that it doesn't work for me. I gotta have more cowbell. Don't blow this for us, Gene! Quit being so selfish, Gene. Can I just say one thing? Say it, baby, just say it.
There you go. There's your Christopher Walken comparison.
That's Bill McDermott. The stock is down. It has been down when they first quarter because he tends not to take up the numbers big because Bill McDermott likes to beat the numbers, and he sure did today. Bill McDermott, ServiceNow, thank you so much.
Thank you so much, Jim.
Absolutely.
When we come back, Kramer's Mad Dash countdown to the opening bell. The open does look to be a little spicy as that 10-year zeroing in on 4 3/4. Don't go away.
The open looks to be a little spicy. That's a cute way to put it. That's a cute way to say the market's down 1.74%. Yes. Don't mind the fact that we just sold off another, percent since these GDP numbers came out. And, oh my lordy, 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 the 10-year is at 4.735 right now. Now, maybe tomorrow we could get a bailout and get, core PCE coming in soft tomorrow. That would be fantastic. Maybe it could happen. But, there's hope, and then there's data. And the plural of data is not, or the plural of hope is not data. So we'll see what happens. Wait for the data. Okay. So, what else is going on? I don't know. Let's see what the top of the Wall Street Journal is today. U.S. economic growth slows to 1.6% in first quarter. Yeah. Economy saw slowdown in spending on cars. Oh my gosh, imagine that. Durable spending down. Any updates or changes to the Tesla strat? Well, I mean, I made a video on that yesterday. If you haven't seen it yet, it's called The Morning After. It has like a GPT picture of, well, it's actually a Mid-Journey picture of Elon Musk. That's probably, that's like the latest and greatest. You can watch that. Mr. Oof. Let's see here. How's house sector? House sector, great. Fundraising deadline is May 1st. And hopefully we fundraise enough so we can do the really good deals that we have options on. And if we can't, no problem. But we're really excited. And hopefully never have to fundraise again either for House Hack. So we could just go to mini funds. If you held those Tesla puts today, what would be your plan? It depends what the open does. If at open you get a big candlestick down, you might get a bounce off that and ride up. So, maybe you close your puts at open. But then again, if you get red candles at open, yeah, I'd probably watch the 5-minute candles and wait for a reversal, especially if I was green, which, with this open, you might be. Although we'll see. A little bit of a recovery there. Just bottomed out at 62.7 on BTC. And phase also recovering a little bit back to about 104.5, was down to about 103 there for a moment. So you did get a little bit more pain about 5 minutes ago than where we sit now. Joe Biden is apparently now saying that GDP shows stable growth, but more work is needed. Yes, more Inflation Reduction Act. That's what we need. I forgot. I'm sorry. American consumers are still spending heavily on healthcare, insurance, and other services, the Commerce Department said, but a slowdown in spending on goods such as cars and gas, as well as a decrease in business investment inventory, weighed on the report. Yeah, and it's not good. I have a little chart here. Well, the Wall Street Journal does. Right here, you can see select components of GDPizzle. Curious to see what happens. Somebody says it's AI, it's the future. Yeah, big next catalyst is next is PCE tomorrow. What's the minimum amount to invest in house hack to get a guaranteed job? Yes. I don't know. Email us at ir@househack.com. Let's see here. AI is going to take over. Yeah, and take jobs. Well, yeah, eventually it will. It'll take substantial jobs. And the reality is we're probably going to have substantial deflation in the long term. Not now. You know, we got a little bit of oopsie pain to go through. So, all right, let's go back over here. Freaking Tesla. It's down like 2.2% right now. What a difference of 2 minutes in the market can do. And, you know, the 12-hour sleep or whatever in between. I didn't get 12 hours sleep. I mean, like, the stock market not being around. I didn't get to sleep until like 1:30. So I came home from Seattle and Spokane yesterday. Today we have Phoenix and Scottsdale, which will be closer. But I came back from Seattle and Spokane. And when I got dropped off, thank you, McKay. Our designated Mormon dropped me off. When our designated Mormon dropped me off, I fed Jay, my little baby, and hung out with him for about 30 minutes. Cute little boy. Yeah. Anyway. All right. What do we got? 3 minutes to go? Good Lord. I don't think that was... This sort of GDP miss was in the bingo board. I don't think it was in the bingo board. What's a designated Mormon? I'll let you think of that. I'll give you some time. So, what do we have? Okay, Tesla down 2-3. Bitcoin is recovering. It is up from 62.7. And it's not disrespectful to Mormons. A lot of Mormons don't drink alcohol. What are you supposed to do? You drive then. It's a feature, not a bug.
Jim is looking down rather sharply in the early going here. Why?
Well, there was a step back in consulting. All the analysts said that. Consulting not being that strong. It had been a business that had been strong. I think a lot of people were hoping that, look, they built this HashiCorp to go with their cloud business. That seemed to be very complimentary.
They did a deal, yesterday.
But at the same time, you have like Tony Sagan. Yes, right. I love his questions because they're always incredibly trenchant. Yes, trenchant questions.
God, Presto X, how much of a dumbass do you have to be? I'm sorry. Like, I think I've said it like 27,000 times. For this trip, these trips we're doing for the House Hack Roadshow to raise money for House Hack, I'm paying for the flights. So you got to think, we're probably spending, $100,000 or more in flight expenses. And here you're going, Kevin using House Hack investor money to pay for hotels and the trips. Okay, yeah, maybe House Hack will pay $2,000 of the $100,000 this trip will cost. Congratulations. You get the dunce cap. So stupid. And these are things I've said, so it's like listening to data or hearing data and then just purposefully saying stupid things after that. It's just so dumb.
A little bit of a critical moment here for AI. People like the fact that their AI business exceeded $1 billion. So all the analysts like it.
Ooh.
No, I know.
Look at Nvidia. It's like perfect bounce on the 780. I love that. It is, we broke through, recovered. So you're recovering a little bit right now. We'll see if the market ends up recovering. Oh, the bell's like now, so let's hit that.
He's talking about process, making process cheaper. I get that. But David,
let's get the opening bell and the real-time exchange and the big board. It is Rubrik, the Microsoft-backed cybersecurity company celebrating its IPO. We're going to talk to co-founder, chairman, and CEO Bipul Sinha in the next hour. Pricing above the range.
Wow, those freaking Tesla puts we had yesterday are up a really nice chunk this morning, which makes sense because the stock's down like 2%. That's nice. Anyway, so I guess the benefit of holding through the night, that's crazy because the theta decay probably hasn't hit yet. But anyway, ooh, Amazon, holy smokas. Look at that. That ain't no jokas. This guy went almost all the way down to my 165 line. It's almost down 5 freaking percent right now. Holy crap, a-molies. Amazon gets absolutely reamed. Sell, sell, sell. Where's my button?
Lost the lead.
Go yourself. Is that clear?
Wow. Okay, Nvidia is trying to run above that 780 level. The Qs are rotating down. ServiceNow
lost the lead.
Down 5.23%. Ooh, Tesla's trying to recover. And BTC's rotating down again, leading indicator. ARM's trying to recover as well. So AI is trying to recover after that GDP figure. But lower interest rate expectations are not being nice to the interest rate sensitives, like Nvidia. You've got Coin trying to get back to about its 218 level. Very common line for Coin to sit at. What else? What else? What else? What else? Apple. Apple's actually up about 77 bips. They have the iPad event coming up on May 7th, I believe. Solar Edge. Down 1%, trying to recover. Banks are trying to recover. The SPY is down. SPY's just not moving at all. Oh my lord, look at Microsoft. 4.33%. Google's down 5%. Oof. Open Doors back to $2. Should we close door? Okay. Back to the top. Nvidia goes back to selling off. The Qs continue to rotate down. Trade desk is down 3.9%. Tesla is only down 1% here. Not bad. I think it's trying to get back to the 162 level. That's a tight play to try to play this for $1. I don't think playing that for $1 makes a lot of sense. But yeah, look at that. You're only down 0.5% now. You're going right to 162. That's where we were sitting yesterday, and that was a big level for it. In fact, I'm going to go ahead and draw the line. That's it. We're going to draw the line. There we go. That's it. Once the line is there, it will reject. And then you'll lose money. Oh. Okay. Hey, like I always say, I'll send you all my trade ideas in stocks and psych. And what you do with them is up to you. But if you want them, we've got, that's all in stocks and psych. I'll send you my theses when I see a pattern or something that I think is an interesting trade. And if you want to get all the buy-sell alerts, make sure you're part of the stocks and psych group. We got a coupon expiring on the 30th, so end of the month, which is next week, which is crazy to think April's, the first month of Q2 is basically already almost done. And then, of course, we have the House Hack fundraise expiring on May 1. Make sure to read the solicitation on that. Nvidia is going straight for 796 here. Let's see if it ends up getting rejected at 796. Watch that level. And BTC stable around 63. And we've got ARM also recovering. ARM usually tries to follow Nvidia. And Nvidia's barely down anymore. Only down about 30 bips right now. It was about 18 bips as I was getting ready to read that. You've got Meta. Meta rotating down more. Ouch. Amazon's down 4.6. That's a crazy move for Amazon. I want to see. I don't think there's any particular news on Amazon, but I'm going to look. Apple, yeah, stabilizing a little bit now that it's up 0.5%. That's not going to offset the oopsie doopsie over at Amazon. My lord. Supermicro's trying to recover. DJT back over $35. Wow. Enphase down to 101. It's about to go back to the 2 digits. Then you've got Trade Desk down 4.5. Facebook, Meta, stupid name, down 16-ish percent, 15.9. How many boomers, and there's nothing wrong with being a boomer, I'm just saying, people who are of the baby boom generation, how many actually call it Meta? My guess is 0. Oh yeah, I posted that on Meta. So stupid. People just like ruin the freaking brand when they change these names. Like Twitter should have stayed Twitter. Meta should stay Facebook. Square should stay Square. The fact that they named it Block, stupid. I hate it when it's like Xerox saying we don't need our name anymore. Let's just change our name to Circle. I don't know. Nvidia
Gained the lead.
there it is, 796. Watch the reject. Live trade. Tesla's trying to go to that 162 level, getting that Bitcoin recovery, sitting at 63.2 now. Ooh, is Nvidia going to keep going? We'll watch it. Q's trying to recover. ServiceNow still down about 5.3, and Meta also trying to recover. We'll see how this goes. Let's go to unaveraged for a moment. Ooh, let's see what happens. Can it break out? That's a big deal. Chipotle, 3,000. Oh, please put me back on average. There we go. See those stupid gaps. Enphase, also seemingly trying to recover. All right, we're going to look at some more news in just a moment. Intel's up 77 bips. Google, 4.5, also trying to recover. 4.5 to the downside. Boy, oh boy. Now, Q's couldn't do it. Oh, what a surprise. Oh, it's almost like the lines can actually work sometimes. I'll see if it breaks through. But anyway, all right, let's listen in. Here for a moment.
Important business for Comcast, frankly. It's about broadband, and that's why on the call, when the CFO said this, the stock went down. Take a listen.
There's no audio.
It continues to be a very competitive environment, and we lost 65,000 subscribers in the first quarter, following the loss of 34,000 subscribers in the fourth quarter of 2023. As we sit here right now, we do not see this trend improving in the near term. We expect churn could be elevated given the end of ACP, which is only fully funded through April and partially funded through May.
The affordable...
Here we go. That's the earnings rollover. I hate to say it. Can you invest in house hack as a European? Yes. As a matter of fact, somebody at my Seattle yesterday is like, can I invest in house hack from Saudi Arabia? And I'm like, yes. I don't care where you invest from. So it's kind of cool. Definitely international or open to international investment if people were interested in it. Anyway, somebody here's Todd. Todd says, you saved me thousands. Sold a few weeks ago. Sold 95% of my investments based on watching your videos. Damn. Well, I'm glad you were able to save money. Very good. Let's see here. Comcast blows. Yeah. Ouch. Did Enphase hit 100? Ouch. Oh, let's go. You made 40% on that Tesla put? You badass for holding on to that. Good job. Let's go. Stocks and Psychology of Money. Trade alerts. Link down below. Just go to meetkevin.com. And then that way when I see trends like it's going to bounce off of this line, oh my God. It's exactly what's happening. We'll see how long it lasts. It's crazy. Okay, so ServiceNow back to a downtrend. Nvidia gets rejected. Q stable-ish. Oh my lordy, look at that. Tesla gets to the 162. Let's see if it can break that line. That's the spot to be. It's been up since the open. It's been fighting to get those $2. So let's see if it can get it. Bitcoin is saying we should be able to trend up after that sell down in the AM. You've got ARM moving up. You've got Enphase still sitting at 101. Palantir, $21 now. Wow. What about, Nvidia continues to get rejected down. And then Visa, let's take a peek here. Visa, wow, even Visa's down 1% on those GDP numbers. That's kind of impressive. Meta just broke below 15%. It's only down 14.99 now. Okay. Let's see what happens.
I want to accentuate the positive right here.
Our Phil LeBeau covered American earlier this morning. Then there's Southwest moving lower on their results. Phil is at Southwest HQ in Dallas with a special guest. Hey, Phil.
Hey, Carl, looking out on left field. Bob Jordan, thank you for joining us.
You're welcome.
Let's be honest, you miss on the top.
Somebody here says, sold 100% of my investments 3 weeks ago. Happy to collect 5% interest and save $35,000 in pain just today. Nice. Dang, 35K just today. Buy Kevin's course. His indicators and videos help me make massive tendies on meta puts. Nice. Good for you. That's freaking amazing.
Record passengers, record Rapid Reward member ads. But we have a number of markets across our network that are just not performing. So we're taking action. We're further optimizing the network. We never like to close cities. We're closing 4 cities. We are cutting capacity in Atlanta and Chicago O'Hare, and we're restructuring other cities.
Ooh, Nvidia's up 30 bips now. Tesla's up 30 bips. You're trying to break out. Bitcoin is that leading indicator, in my opinion. That bounce on BTC, double bounce right here, and on an uptrend. I always like to use that as sort of a leading tell when I'm trading. It doesn't always work, so you have to be careful. Some days Bitcoin lags, some days it leads. But that always makes me pay attention to, hey, am I going to close a put? Am I going to, go for a call? It's one of the things I consider. And so look at this. Look at that Amazon recovery. Now, remember, the first 15, 30 minutes of trade, really difficult to determine direction. Very, very difficult. So I personally don't love trading unless I'm closing positions in the first 30 minutes. Like I said, like if you held on to the Tesla put, it's like, okay, maybe you close it first thing in the morning because we're down 2%. That's great. You're up. And then, if it starts running, well, then you lose money. So let's see what else is going on. So let's sort by losers and then we'll go by winners. So losers, Meta 14.3, that's actually recovering. ServiceNow down 6.4, not a surprise it's down worse. Enphase down 6, not a surprise it's down worse. Trade Desk down quite a bit, 4.7 here, not great for advertising spend. Amazon recovering, but still down 3.6. You're about to break into the 13s here on Meta, so you're definitely getting some recovery, which is optimistic. Looking on the green side, you've got Trump stock up about 8%. You've got Tesla up 1%. Nvidia now breaking out above. As soon as you break out above that line, it starts getting violent. And sure enough, you go from 796 after that rejection there to a breakout. You're at 804 now. Then you've got Royal Caribbean's up 60 basis points. Let's see how long some of this can last. Coca-Cola is up 1.2. Apple's still holding on to about 0.5%. That's awesome. Have to say, Kevin's streams and courses helped me pay at least $15K per year on realized gains taxes in the past 4 years. Oh, that's awesome. Congratulations. Good for you. It's a good problem to have if you pay taxes. So, of course, if you can defer them through 1031s or otherwise, that's great. But, that would be real estate. So here's Tesla. Blew right through. And as BTC is leading, shows you that the desire is probably to be bullish today. Let's see how long that lasts. But right now we're about 14 minutes into the trading day. Pretty good moves here. We will see if they continue on those hotter than expected GDP numbers and the delay of rate cuts. Getting that run here on the Qs as well. Yeah, remember tomorrow is PCE, so that'll give us some more inflation data. And if that inflation data comes in good and Microsoft beats, maybe we can actually get a rally on the Qs that, isn't just like a rally off of like negative 1.8% to 1.5, but it's actually a rally. So I'd pay attention to PCE. That'll come out tomorrow at 5:30 a.m. I'll cover it. You've got Nick T just tweeted, this is a notable miss. Expectations for Q1 were 3.4%. After March CPI and PPI, Wall Street forecasters were expecting core PCE to rise to go up about 0.27% in March, which would imply a 2.7% 12-month increase. Right. Well, let's see what ends up happening tomorrow if we end up getting that 2.7 or what. So we'll also want to see, are we going to be able to sustain some recovery for some of these stocks? The Qs are trying to push a red candle again. Nvidia's not yet, but if it does, it'll go right back down to 796. Could be a place to enter a short. Just keep in mind, the next level for Nvidia, if it runs, is 850. So 850 is a much stronger line. It's a blue line versus a yellow line. If you get up to 850 and you think you go short into the end of the day, it's an option. Just be careful. End of the day trades can always be fun. I prefer morning trades. Tesla's trying to come back down. We are watching BTC also showing us a little bit of topping there on BTC. Chipotle over 3,000, really amazing. ARM has almost fully recovered. Enphase is just broke to 99.75, unfortunately. Supermicro goes green. It's impressive. AI seems to be somewhat trying to recover at the moment. Apple, look at that. It's sort of petering out around 169. Well, there's a pretty big support. Goog, 3.7. And watching the Qs here. Okay, let's go for some other news. Yeah, here comes your red candle on Nvidia. Okay, topping out at 811. It's gonna go right back down to 796 then. And Q's topping out as well. Let's see what's happening here. Tesla's holding on to about 1%. Really wants to hold on. And BTC is sitting around 63.3. Okay, so let's see what other news there is. Let us find out. So, economic growth slid to an almost 2-year low. Ooh. I'll write that down. That is a 2-year low for GDP. Okay, we covered the other items. The inventories, the construction, the miss on GDP growth with a stagflationary read. We got, let's see what the 5-year break even is doing. 5-year break. Meta recovering. It's only down 13, so you've got a bottom potentially on Meta. So there could be a way to bet on Meta and a recovery here on Meta. The trend is pretty clear right now. But usually what I like to do is sort of wait for like a dip. And then once you rotate up and you get these rotating, then maybe that's an opportunity, but depends. Sometimes it just runs 5% straight. Inflation expectations only rose a little bit. You're at 244 right now. And if I go for the 210s to measure a spread between the two, yeah, come on, Meta. Let's see you test a little bit. You can actually get traded. Yeah, still sitting about 29 basis points inverted. Yep, here you go. Here comes a little bit of a red candle on Meta. So we'll see where it hits. Same on 165 resistance there on Tesla. Now under 100 officially for Enphase. All right. Let's see what else. I don't think there's any 7 o'clock economic data, is there? Nope. Pending home sales. Oh, pending home sales come out at 7. Who cares? That's boring. Then we've got stocks get hit as GDP brings worst of both worlds. Yeah. Chipotle tells staff to skip chicken as demand surges. They're so good at managing their costs. We just don't have that anymore right now. The manager says it's too expensive. RIP. BTC, leading indicator. Okay, hot wars, cold wars, trade wars. What do we got here? Strong GDP under the surface to keep the Fed on hold. Duh. I'm not looking forward to JPOW May 1st. At all. I think JPOW's gonna JPOW us. Yeah. Zuckerberg asks for patience. That's true. On the earnings call, he was very much like, hey, you know, smart investors should see what we're doing with AI and know it's going to play out. Okay. That's fine. If you got a long-term time horizon, it will eventually. I don't disagree with that. But short-term is what people care about too. The short-term has feelings too. Don't only diss the short-term for the long-term. Tesla, yeah, I have a little trouble with that breakout there above 162. Ooh, BTC is trying to go green again. And still sitting at about 100 there on end phase. I have a feeling that one of the reasons, one of the red flags to me was that they didn't do more buybacks this quarter. Like, if they really thought they were bottoming out on the stock, they would have done way more buybacks than $44 million. Remember, they have like $1 billion authorized to do buybacks. Nope. Did not see it happen. Apple 43 bips. Q's 162. Trade Desk 348. Okay. And the Nvidia pops off again. And still waiting for that bottom there on Meta. Very well. All right. What else? Let's see here. Oh, dear Lord. What do the Doomers have for us today? Let's find out. Oh, okay. It's going to cause problems. Fine then. No Doomers today. We didn't want you anyway. We'll just watch CNBC ads. See, look at that. Oh, gosh. Now I'm going to get demonetized for showing weight loss drugs. Whatever. Okay. So, market's trying to recover here. It's really trying to push a recovery. Although Meta's getting a little stuck. And so with the Qs. Alright, what else? Nick T. What's this? Oracle introduces new AI capabilities. Wow. From 0 to something. Notable miss for PCE. Yeah, that's not good. 3 Sigma miss. This is a good chart by Zero Hedge. Right here. That's funny. They just inverted the colors from the Bloomberg terminal to make it look different. Anyway, so GDP was expected to come in. Here's how to read this. GDP was expected to come in. See, it's like a histogram. Okay, it's a bar chart. There we go. This is where people were expecting GDP to come in. Nobody thought it was going to come in as low as 1.6. Nobody. They were all wrong. Why do we listen to these estimates anymore? And nobody thought core PCE was going to come in this high. So, hot inflation against expectations. Weak GDP against expectations. Now, is that really 3 standard deviations? Well, here's one. Oops. Let's see. Oh, it's not like Apple where I can use. Sometimes I can measure that over. Oh well. Oh well. Nvidia 1.6. Ooh, there's that little bounce we're looking for on Meta. Looks like 426. Let's see if it holds on to that when it hits it again here. We'll see. 426. Nvidia's pushing. Well, it's got that breakout. ServiceNow's not. They continue to break down. And Amazon 3.7, capping out a little bit. 70 bips on Tesla, getting stuck a little bit. BTC's getting stuck a little bit. Slowing momentum, 99 here. Still 8.5 on DJT. Supermicro turns red again. Embraer 1%. Sunrun 3.8. Oh. Okay, that's definitely following Enphase. Some Enphase sympathy. Alright, what else? So, that was an interesting chart on how much of a miss that was. Yeah, Meta drops 190 in market value. Yesterday it was down as much as $200 billion. And I tweeted, how to lose $200 billion. Misguidance by 1.3%. It's crazy. You can see that right here. This is my tweet yesterday. It's wild. Oh, look, here's a picture of one of our house hack stops. That was San Jose. They let us on the tarmac. That was pretty cool. Keep in mind, next stops today, actually, Vegas, Scottsdale, Then we go to Oklahoma, Nashville, Miami, Tampa, Orlando, Atlanta, New York City, Richmond, Toronto, Chicago, Denver, Dallas, Houston, Austin, San Diego, Long Beach. Whew. It's a lot to go. A lot of trips. Yeah, Meta can't keep it up. That's why I always like to look for a confirmation before I get in. I haven't gotten it yet. So, especially the first 30 minutes of trade. First 15 to 30 minutes, I always say, I don't know, a little early. My favorite time to trade is probably 7 to 10. California time. Commie time. I mean, Pacific time. So, and then, yeah, the 10-year treasury yield's up 4.725%. Yeah, when in Atlanta, I don't know, in a few days. Just go to househack.com/RSVP. You mentioned Boston. I did. Where in Oklahoma? I think it's Oklahoma City. Why Richmond? Just do DC? You try to fly a plane into DC. They have some, like, issues because of 9/11, apparently. It's a pain in the ass to fly into DC, so we're doing Richmond. Bro, almost every city is blue. That's just the way it works. It's called demographics. How much is the course member live stream? And all of the courses come with it, so you just pick the cheapest one there. If you have any questions, just email us at staff@mekevin.com. Oh, did Whirlpool report? Let's take a look. Those are going to be some durable numbers. I don't know, the market has not been optimistic about them, but sometimes you get that massive pessimism like you saw with Tesla, and then you get a bounce even on bad numbers. Because you get hope. Oh, no. Whirlpool is slashing 1,000 jobs. Hits 52-week low. Down 6.3%. Turnkey home appliances exports fall 5%. Turnkey home appliances. Wait, that's exports fall 5%. But sales rise 28%. That's probably comparing to a whole, but they're still cutting jobs. Q1 EPS actually beat, and net sales beat a little bit. 4.49 billion versus the 442. So they must be down because of job cuts. Little bit of a miss on free cash flow for the year. And EPS for the year came in stronger, and so did fiscal year revenue. So the numbers actually don't seem that bad. I think it's the job cuts that whacked them here. 1,000 jobs. That's a lot of people. Bro, it's down 9%? What's the dividend yield on that sucker now? /RSVP doesn't exist? Oh. Househack.com. Yeah, it does. Househack.com/RSVP. And then it gives you literally the dates and times of where you're going to be. You just, which location will you attend? It's all right there. Househack.com/RSVP. If you have problems, okay, if you have issues, househack.com. Enter Investor tab. Free roadshow. Click. And then it goes to the form. Yeah. No love for Ohio? Well, maybe all you Ohioans should have filled out a freaking survey form when we said, where should we go? Apparently, you didn't vote. Anyway, so QQQ is trying to recover. 162. Nvidia is really trying to lead over here. At taking, once we broke over that 796 level, a nice little push there. BTC is trying to push up as well, so good for it. 63.4. Then you've got Hasbro's down another 2%. Denver's on that list, yeah. Oh yeah, pending home sales. Ugh, you really care about that? All right. Okay, pending home sales month over month are expected to be 0.4% growth. I'm gonna bet 0.1% growth. Going bearish on home sales growth. Okay? What are you going to give me if I'm right? And what are you going to take from me if I'm wrong? Don't take a like, please. Holy shit. It beat by a lot. 3.4% versus literally 0.4%. So pending home sales like skyrocketed there. That's really interesting. Is that an adjusted number? Or how do they come up with that? I think that might be a seasonally adjusted number because that's freaking crazy. Oh, yeah, it's seasonally adjusted. Oh, I wonder. Wonder how much of an influence the seasonal adjustment had there. But that seems kooky. That's some crazy talk. Crazy. Somebody here says, sold all my Enphase stock at 130 and just rebought at 99. Let's go. Discounts. Whirlpool's. Oh, yeah, I was going to look that up. And then I got distracted because somebody was asking me that the RSVP website doesn't work. It works. 7.29% yield, folks. Buy Whirlpool. You will make a 7.29% dividend. Just don't mind the fact that you might lose 9% in a day while you collect that 7% annual dividend. Oh. Dude, Whirlpool is just getting smoked. 21% year to date. I think only Tesla is doing worse than that. Maybe Boeing. Let's see what Tesla's year to date is. Oh, 34%. Shot right through the heart. How about Boeing? 35! Tesla, I can officially say, is doing better than Boeing. Wow. Crazy. Look at how hard it is to get direction today in this crap. Nvidia's topping out. Loser. The Qs are rotating down. ServiceNow. That's a scam. Okay, I can't. Don't sue me, bro. It's a joke. It's an opinion. Meta has not given us a really good confirmation yet here. In fact, now you're getting lower highs. BTC's rolling over. Oh, look at Tesla go right back to 162. The lines. It's the lines. What else? Wow, Enphase down 7. Did you rebuy it at 99 just to say that you were going to rebuy it at 99? Remember, higher for longer. Oh, boy. GDP numbers don't help. I think you need a good PCE read tomorrow, and maybe you could see some run in some of these inflation sensitives, interest rate sensitives. Someone here says they replaced a Whirlpool fridge with LG. You just cost them 9%. You know how much money you just cost them? Whirlpool. This is all your fault. 8.82%. Market cap 5.25 billion. So that's 5,250 million. You just cost them $463 million because you went to LG. You, sir, are part of the problem. Wow, that's a lot. Rivian makes Tesla look like an A+ student. Oh no. Beat up stocks to buy. Everything? No, I don't know. Well, I know a lot of people are interested in buying the dip on Meta, honestly. It's like, oh no, this is the perfect time to buy Meta. Yeah, maybe. I think their rally has been a little euphoric. I like Amazon. Where's that sucker? I think it's down like 3% today. Microsoft's down $17. Let me see. Microsoft. Yeah. 4% on Microsoft. It's a pretty big move. And Tesla's only up 25 bips right now. At least it's not negative like everything else. Embraer is trying to climb. All right. Any other news? We're going to get to our course member live stream. Faster inflation, lower growth. Growth. Oh my God. Faster inflation, lower growth fuels currency weakness for the Mexican peso. Janet Yellen's talking and yapping. Americans are concerned with bringing the high costs down. Yeah, good luck with that. Not seeing that wage pressures are a source of inflation. Okay, Yellen. 10-year bond still sitting up 7.1 bips. Okay, dokie. Think it's time to push the button. Did I mention that we have a coupon code expiring next Friday? Or is it next Friday? No, it's like next Tuesday. Yeah, it's next Tuesday. Email us at staff@meetkevin.com if you have questions. And make sure you get your letter, househack.investready.com. All of the links, by the way, are over at househack.com/2024. Really important that you read the investor PPM, investor presentation, get your accredited investor letter, come to the roadshow. Again, where did I say I'm going? Vegas and Scottsdale today. Then we got Oklahoma, Nashville, Miami, Tampa, Orlando, Atlanta, New York City, Richmond, Toronto. That's Canada for the people who don't know where that is. It's in Canada. It's a country. They have a really weak currency, but it's still people that matter. My wife is half Canadian, so I'm allowed to say that. That means my children are a quarter Canadian. And 50% German and 25% American. Denver, Dallas, Houston, Austin, San Diego, and Long Beach. So, now I'm going to push the button, and I'm going to look at the sticks. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There it goes. This is what I was waiting for. Some kind of bottom. Looks like you might be trying to bottom off over here on VWAP. And I mean, obviously not a perfect bounce there, but I'm gonna watch that pretty closely here. But that's bullish on Facebook. Buy the dip, Facebook. Tesla
lost the lead.
Go yourself. Is that clear?